Many of us are confused whether to opt for the old tax regime or the new tax regime. The best way to decide is to calculate the deductions provided under both regimes for the respective tax slabs. Watch this video until the very end to find out which tax regime is beneficial for you. Hi everyone, I am Prarthana from Clear. We are India's largest tax and financial services platform where we have served more than 6 million tax filers. Subscribe to our channel to learn more about income tax and GST related topics. The Budget 2020 introduced a new tax regime under Section 115 BAC of the Income Tax Act 1961, giving individuals and HUF taxpayers an option to pay income tax at lower rates. The new system is applicable for income earned from 1st April 2020, that is financial year 2020-2021. Let's look at the tax rates under the new tax regime and the existing tax regime. This new tax regime slab rates are applicable to all types of individuals, including senior and super senior citizens and also the HUFs. However, the senior citizens and the super senior citizens enjoy the benefit of higher basic exemptions of Rs 3 lakh and Rs 5 lakh respectively in the old tax regime. The new tax regime does not allow 70 deductions and exemptions. Let's look at the tax payable under both the new and the existing tax regimes without claiming deductions and exemptions.
The table shows that the new tax regime generally saves taxes for taxpayers who don't claim any deductions or exemptions. The new tax regime introduced under Section 115 BAC is beneficial for taxpayers having no major exemptions or deductions.
Some of the major deductions and exemptions you cannot claim under the new tax regime are:
the standard deduction under Section 80TTA or 80TTB, professional tax and entertainment allowance on salaries, leave travel allowance or LTA, house rent allowance or HRA, minor child income allowance, helper allowance, children education allowance, other special allowances under Section 1014, interest on housing loan on the self-occupied property or vacant property, Chapter 6A deduction, that is deductions under Section 80C, 80D, 80E and so on, except Section 80CCD2 and Section 80JJAA, exemption or deduction for any other prerequisites or allowances, and lastly deduction from family pension income.
Are the deductions that cannot be claimed making sense? If it is, write clear in the comment section below. However, under the new tax regime, you can claim tax exemption for
transport allowances in case of specially abled person, conveyance allowance received to meet the conveyance expenditure incurred as a part of the employment, any compensation received to meet the cost of travel on tour or transfer, daily allowance received to meet the ordinary regular charges or expenditures you incur on the account of absence from your regular place of duty, deduction for employer's contribution to NPS account under Section 80CCD2, and deduction for additional employee cost under Section 80JJA.
Planning perspective, choosing the tax regime at the beginning of the financial year is essential. If you are a salaried taxpayer, you can choose the new tax regime at the beginning of FY 2022-23 and intimate your employer. In case you do not choose the new tax regime at the beginning of the year, your employer will deduct TDS under the existing tax regime. Also, a salaried taxpayer can opt in and opt out every year. That means you can choose the new tax regime in 1 year and choose the regular tax regime in another year. If you are a non-salaried taxpayer, you have to choose the new tax regime when filing the tax return. You need not declare or intimate your choice to anyone during the year. However, a non-salaried taxpayer, that is taxpayers with an income from business or profession, cannot opt in and opt out of the new tax regime every year. Thus, once a non-salaried person opts out of the new tax regime, they cannot opt in again for the new tax regime in the future. You must compare the income tax under the new tax regime with the existing tax regime. Once you choose the tax regime at the beginning of the year, the investments and TDS or advanced tax payable calculations are made accordingly. Also, you have to furnish Form 10IE to the Income Tax Department before filing the return if you intend to opt for the new tax regime. Let us take an example where the new tax regime is better in respect of the tax outflow.
In the given table, for an income of Rs 12,50,000, the new tax regime is marginally beneficial by Rs 1,851. However, if you claim further deductions for health insurance, investment in NPS, education loans and so on, the existing regime will be helpful in respect of tax savings. Let us look at another example where the old regime is better in respect of tax outflow. In this example, for an income of Rs 10 lakh, the existing tax regime is beneficial by Rs 3,099.
If an individual claims lower deductions for tax savings, however, towards health insurance, investment in NPS, and so on, the new tax regime will be more beneficial compared to the individuals who utilize the tax saving investments. Also, individuals with an annual income bracket between Rs 5 lakh to 10 lakh with lower deduction claims will benefit from the new regime. In contrast, individuals under a higher income bracket above 15 lakh of income per annum can benefit more from the existing tax regime by making tax saving investments. It is important that you calculate your income tax, consider your tax saving investments, and then choose the regime. Simplify your income tax calculation by using our income tax calculator for FY 2022-23. Just enter your basic details, income and deductions, and find out which tax regime is more beneficial for you. The link to our income tax calculator is provided in the description box below. So folks, I hope you understood the new tax slab rates and deductions that you can claim to find out if it is beneficial for you. If you have any queries, leave a comment below and we will clarify your doubts. Also, don't forget to subscribe to our channel for more tax related content. Thank you so much for watching. Take care.